without further ado, Ezra Roizen.
Thank you. Thanks, everyone. This is great. Very exciting to be here and to be here. And as Mary said, born in Oakland, have been doing startups in Oakland since 1993. I had lush brown hair when I started, and and really it's great to see the transformation of the city, and great to see great companies come, and great to see this economic development. So I've been waiting to not have to drive across the bridge for this kind of stuff for a long time, or a bridge. So we have two panelists here to talk about sort of the future of tech and trucking, and generally transportation and logistics is an area wide open for innovation and wide open for opportunity. Obviously, how many people here took an Uber or Lyft to get here? You've seen what transportation innovation can do to markets, and the opportunities are tremendous across the spectrum of companies. So even just researching, as I was doing for this panel, it was clear to me that these guys are heading into, and the group here collectively is heading into some really interesting times. So we have, Shoaib Makani. He's the CEO of KeepTruckin. When I was poking around and looking online to learn more about KeepTruckin, I was generally just researching most innovative companies in trucking, transportation, and every time I got to an article, his company was mentioned somewhere on the list. So he's doing a lot of things right, clearly. He has great entrepreneurial credentials beyond KeepTruckin, which is the leading fleet management an electronic log provider, previously a VC at Coastal Ventures. Actually asked Bambi to tell you the Ben Ling story about coming to Oakland. She was doing an event, and she said, this and here, and it's going to be in Oakland. He goes, it's fantastic. Where's Oakland? Or where is it? So Instacart, Everlane, HackerRank, all investments he's made as an angel, has had positions at Google and Yahoo, was an early team member at OddMob, which was a great startup that had a terrific exit, and has a degree from the London School of Economics. So tremendous background, and terrific to have you here. Matt Kropp, CEO of Freightstar. Matt, I had a chance to visit and had lunch with him yesterday, previously at BCG, and really studied the industry along with the co-founder of the company CCR, who really, it sounds like, did a great deal of thinking about this business to get it started, which is an area actually I want to touch on a little bit about how you actually got the idea and got off the ground, both guys, a little bit later on. Was involved in Internet 1.0, Lot 11, acquired by US Web CKS. He actually co-founded a company, Transplant Connect, which supports 70% of the organ transplants in the US. So if you have to move delicate cargo, I would assume that's high on the list of delicate cargo. And it has an MBA from Wharton Business School and a BS in aerospace engineering from UCLA. So both gentlemen here have careers and educations that cross a great deal of interesting topics and expertise. So to start with, one question that Matt and I had a chance to visit on that I was really surprised and a little bit taken aback was to hear how fragmented the trucking industry is, and that this is an industry that's sort of dominated by a few giants. You look at sort of shipping, and you see a few names on the container ships coming in and out, but I didn't realize that trucking was almost the opposite. So maybe, Matt, if you could start with just give us a little bit of background on the industry itself, and give us a little level set on just the fragmentation of the industry, the scale and diversity of players in the industry.
Yeah, so this is something that when we got into this was kind of a key to our thinking. So, there are 3.5 million trucks. So I'm looking at these guys. I'm sure they know all this data. 3.5 million trucks on the road in the U.S. And the industry is just massive. So truck freight is a $700 billion industry just in the U.S. So that's compared to like taxis and limos, another company that we all know about. That's about a $13 billion industry in the U.S. So this is just huge, but it's also very, very fragmented. So out of that, there are something like 500, 600,000 fleets, and so half the trucks on the road are with fleets less than 20 trucks. So you don't have, it's not like cargo ships where you've got six players. Here, you have just huge number of small players, Even the biggest players. So I did some work with one of the biggest truck for hire fleets is Schneider. They've got about 15,000 trucks. So 15,000 trucks out of 3.5 million. That's the biggest for hire carrier. So what that means, from a tech software perspective, is the opportunity is really in almost a consumer level product. And I mean, this is what you guys are doing so great. There's so many, the customers out there are in these small companies. They don't have an IT department. They don't have a lot of money to spend on software. They need products that are more like what we use all the time, our smartphones and Google, Google Docs and so forth. That's where the big opportunity is. That's not what the software companies that have been focused on transportation have been focused on, over the past decades. You look at companies like TMW, who makes the fleet management tools that are used in the big fleets. These are big, expensive, on-premise installed software platforms. You have to have an IT department. You're going to spend $500,000 or more a year on their software. And the small guys, which is most of the market, they can't even play in that. So as a result, a lot of them either have nothing. They have a whiteboard and Excel files and paper logs, or they may have some lower cost solutions. But there's really this big part of the market that has this huge opportunity to bring them, the kinds of tools that we all take for granted as consumers. So that was kind of one of the key things that we saw in the beginning.
Are you seeing, how does that diversity in the marketplace, does it make life easier or harder?
Yeah, so I think, there's no doubt that there's fragmentation in the market. The vast majority of the vehicles on the road work for carriers that have less than 50, 100 vehicles, and those are, I would say, distinctly non-professionalized enterprises. You don't have IT purchasing departments. You don't have sophisticated finance operations. You don't have people that you can sell to that have experience buying software. Or hardware for that matter. So you have a really different audience, and given that it is SMB, these are fundamentally SMBs. You have to take into account the cost of distribution and the way you deliver your product to reach them effectively. You can't go out there and hire a big outside sales team to go and reach fleets that have tens of vehicles, even though that is the bulk of the market. It represents the majority of the actual opportunity. You can't just brute force it. And that's sort of what prompted us to look for opportunities to have a distribution advantage. Where could we reach the customer, the end user, in a sort of organic, self-distributed, word-of-mouth fashion? And that's where, when I sort of personally identified electronic logs and sort of an improvement on paper, that's where sort of it went off for me, and I realized, all right, this is the opportunity to give, to solve a problem for the end user, the driver themselves, and let them bring us into the company. And so that's where you have to really not just think about the product that you're building, but how you bring that product to market, how you distribute it, and how does it aid in your actual ultimate goal. And so for us, the initial product was a wedge, and that was a function really of that fragmentation. We wouldn't have been able to build this business otherwise.
So you guys keep the mic on, just ask the question. Two drivers, one regulatory and one economic. So how are sort of economic changes and technology opportunity on one hand, and how are regulatory dynamics affecting both of you guys' businesses? And which one's, for you feel is the more powerful force you're kind of leaning into?
Yeah, as an entrepreneur, you always want to solve problems, and you want to deliver economic value. You want to either save people money, make people money, and in the process, make yourself money. And so there's no question that we aspire to be a company that solves problems, creates value for our customers. That's what our mission is: connecting America's truckers. We want to bring the same technology and utilities that the large fleets have had down market. And that's what we are doing. We're making the products that otherwise cost thousands of dollars per unit to deploy down to tens of dollars per unit to deploy, and without sacrificing any functionality. And that is now possible more so than ever, given that you have this dramatic platform shift from proprietary computational devices to you've got open platforms, iOS and Android. That's what allowed this to be possible. And so we are without a doubt focused on creating economic value for our end user. But we happen to also benefit from an incredible regulatory tailwind. Our product is mandated, it is required by the end of the year, 3 million commercial vehicle drivers who drive long haul. And it's not just over-the-road for-hire freight drivers. It's oil and gas guys, motor coach drivers. Anybody who drives more than 150 miles outside of home base is subject to this regulation. And it is, oftentimes regulation is sort of considered very negatively by Silicon Valley, but it can actually be a great thing. And in this case, it is the catalyst for connectivity. It is what is bringing this industry online in a really accelerated fashion. And the way I think about it is regulation brings us into market and drives our business. But what it actually ultimately does, and it improves road safety. Like the ELD mandate that we are essentially here to execute on in the next 8 months, it's going to have incredible safety benefits for the industry. But it'll also, and I think perhaps the more significant impact is that it'll bring these guys online, and the subsequent services and innovations you can deliver on top of that are very, very significant, and we're just sort of starting to scratch the surface.
I think just something that's so interesting for what you guys are doing. So if you guys don't know, KeepTruckin, so this is it's replacing paper logs, right? This is something that drivers had to do manually with paper in the past. As of the end of this year, they're going to have to do it electronically. So you talk about a tailwind. It's like your market was totally dictated by the government. Of course, the truckers themselves don't necessarily like the regulation, so there's sort of this double-edged sword. But I think it's really interesting how you guys are kind of coming in right at the right time and providing this solution that meets that need. So it's been doing it for 4 years. No, I know, but right, it's the 4-year overnight success, right? For us, it's a little bit different. So we don't have any regulation that's changing. However, we've really found so the driver for where we create value is this. Just as the truck market is very fragmented, a big part of this business, so something about like $100 billion out of this business, is what we call the spot market. So this is transactions, that are happening sort of on a day-to-day basis. I've got my contracted trucks. I'm a shipper. I got my contracted trucks, but I need an extra 2 trucks this week, so I need to go to the spot market to get those trucks. That's a $100 billion business itself, and that business is facilitated by 12,000 brokers. So you can imagine if there are 12,000 brokers, you can imagine what they are. It's a guy with a phone. And it's very old school, and it's what they're doing every day is they're calling shippers and they're finding freight. Once they've got freight, they quote something to that shipper and say, "I'll do that for $5,000," and they turn around and they call the carriers and they say, "Hey, I can only give you $2,000," and they try to find a carrier that'll take it, and they're making that spread. So here is a middleman that really adds zero value. Yes, they connect, yes, they facilitate this search, but in the end, once they've made that contract, it's up to the carrier to deliver, and the shipper's sort of on their own. So you've got this big industry, and by the way, they take something like 20% of that $100 billion. So there is a bunch of profit there that they're siphoning off, not providing a lot of value. And I'm looking at these guys because they're kind of going after the same thing. It's just a perfect opportunity for technology to facilitate that transaction. It should be a marketplace, right? You should be connecting the shippers and the carriers directly. You shouldn't have that middleman in the middle. You should be able to have a much better search, where that broker knows, they're going to call their list of 10, 15, 20 carriers until they find a truck. If you've got a true digital marketplace, you should be able to look at all the trucks that are out there. So here it's more of an economic incentive. There's clearly this middleman that is taking value and not providing a lot of value. But the other thing that we've honed in on, because we're not the only ones that have this idea, we've actually really focused on a part of the market that is heavy haul, so oversized, overweight, because it has a lot of regulation, because it is specialized, because it is harder to do. As opposed to if you want to move what's called a dry vans, or just a box truck or refrigerated truck across the country, there are no permits. You don't have police cars, chase cars. You don't have pilot cars. It's just the cost of the truck. The loads that we're doing, the shippers that we're working with, are moving. Those you see on the road, the oversized load sign on the back of the truck. They're moving big cranes. They're moving huge transformers. They have pilot cars that have to go in front of the truck with a pole that sticks up to make sure they don't hit bridges, and pilot cars in the back that make sure that other cars know that it's a wide load. Sometimes they have to have a police escort. They have to pay permits in every state. They have to pay permits in a lot of counties. It's actually very complex because of the regulation to move one of these loads. And so what we've done is we've created this calculator that basically factors all that in for you, and as a shipper tells you, here's how much it's going to cost to move that load. Today, they don't have a way to do that. Today, they have to go to a broker, essentially, and say how much this is going to cost, and then who knows what they're going to get back. The broker's going to try to tell them, oh, it's really expensive because of X, whereas we make it very transparent. This is exactly what's involved in making that move. So we don't have the imperative that you guys have, which is, fantastic. The government is pushing customers toward you, but at the same time, we have this opportunity because of the complexity of the regulation.
So leaning a little bit more to distribution and adoption, which is ultimately the biggest challenge for a startup, and timing the market in terms of when is the market going to actually start to pick up new technology innovation. And could be said possibly that trucking lags a little bit as a technology adopter of maybe new innovation, maybe not. But it sounds like there's a lot coming onto the market. So A, how do you view the market, the industry, the customer's view of companies like yours in terms of wanting to now adopt technology, or something that's more kind of either being forced on them by market dynamics or being forced on them by regulatory dynamics and things they sort of have to adapt to? Are there leaders that you're seeing saying, look, technology is actually going to be a competitive advantage, or is it, hey, if we don't do this, is it greed or fear that's motivating the market?
Yeah, it's interesting. I mean, this was, I think, when we got into this, this was one of the biggest questions and the biggest risks is how fast is the adoption curve, right? And you definitely get the sense trucking is maybe not the most forward-thinking industry. Certainly we got a lot of questions. Are they, adopting technology? If you have a smartphone-based solution, do the drivers actually have smartphones? And actually, what I would say is, as an industry, they're very interested in technology where it helps their business, because it is not a high-margin business, and anything that they can do that helps them cut costs and manage their fleet more effectively, they will be interested in. That being said, it is still very old school, so you kind of have, you walk into their facilities and they're not the most modern facilities, and they don't have an IT person, and their computers may not be the most up to date. But I'll tell you, when we were at the Mid-America Truck Show in Louisville a couple months ago, it was this great scene. I was standing behind these two guys who were talking to a technology vendor. And these guys, they both had the long beards, but they were pulling out. Both of them had two smartphones. They had a phablet and a smartphone. They were talking about how they mounted their computer on their dash, totally into technology. So, I think we're right at this point, and I'm really interested to see how you guys see it. We're right at this point where, because it's sort of this democratization of technology, right? Because smartphones are now in everybody's pocket, because cloud technology means you can deliver software much more cost effectively than installed software. It's really getting to this tipping point where I think the industry is adopting. So just maybe one example. I mean, what you guys are doing. The solution before, the electronic logging solution before KeepTruckin essentially were these installed telematics systems, which have been around for decades. They're very expensive. It's like a tablet. it's like a bad tablet basically with a bad UI, but it costs $1,200 and it's installed. And what you guys are doing is saying, well, you don't need the $1,200 tablet. You go down to Best Buy and you get the $200 Android, which is better than the $1,200 tablet, and you put our app on it, which has a better UI than the software that's on that tablet. So we're actually getting to the point where, because the price is coming down for these technologies, the guys that they're willing to adopt software if it helps their business, but before they couldn't afford it. Well, now they can afford it, and now, of course, they're going to adopt it, I think.
So adoption.
Yeah, no, yeah, totally. So, I mean, I look at adoption for us as two stages. The first stage of adoption was of our free application that is essentially a paper log on your phone. And when we look at sort of the trajectory of that product, we've got 500,000 drivers who have signed up for it. We're talking about a very significant percentage of all commercial vehicle drivers have know about KeepTruckin, have registered for it, gotten through. Some may not all of them use it every day, but a very significant portion have found it, told each other about it, sought it out, and that's like for a percentage of the workforce, that's a very significant size of the population. And so I by no means do I think this industry's technology laggard. It's just people haven't been creating great products for them. There hasn't been a ton of focus on the needs of the driver, of the fleet manager, definitely not the driver. And I contrast that with other SMB markets like restaurant tech, where you just have literally this hyper normalization. You've just got like tens of companies going after the same exact problem, and that's what kind of drew me to this problem. Was it's incredibly underserved, despite the sheer size of the opportunity in the market. It is a market that people don't build for, and a lot of it's because you don't see it. You consume goods, they get to your store. Unless you're driving an interstate highway, you're not really making contact with these people who sort of make everything possible. And so I think some of the that sentiment of these guys are technology laggards is driven by the fact that there's not great products for them. And obviously that our mission is to change that. We want to build great products for them. And so we've done. I think the adoption of our first product was really strong. Self-adoption, free. We didn't market it. It was all word of mouth. Now, when it comes to the ELD, there's definitely some resistance among smaller fleets and drivers to this idea of a device that plugs into my engine and tracks where I go and creates what I would call inflexibility when it comes to driving on the margin a little bit longer, or getting home, or finding parking, and and I think there's actually really credible reasons why they pose it. It's like, oh, well, I just want to get home. I'm 10 minutes away, and now this thing is telling me I can't. It's not going to shut down the vehicle. Some people think that. But it's like, hey, I just want to get home, and so and it's understandable. But I think what's happening, and especially among the medium-sized fleets, and keep in mind the large fleets, the big enterprise fleets have had these telematics, fleet management solutions for many years. It's the medium-sized and the small-sized fleets, the SMBs, that have not. And I think what they're recognizing is, yes, we perhaps lose a little bit of flexibility when it comes to the hours of service, but what we gain is massive reduction in paperwork, reduced violations, more compliance with the actual regulation, a better carrier record, which actually impacts the business that I can win. And then actually, really importantly, and this is super nuanced, but these carriers realize it, they get that by having every single vehicle continuously tracked, they actually expose themselves to potentially higher yield. They can have higher yield on their asset. And the reason being, and this is sort of the biggest knock on traditional freight brokerages, you don't have visibility into where supply is. You're calling trucks blindly, saying, "Hey, can you take this load? Can you take this load? Can you take this load?" Which results in a less competitive auction and underutilization of assets. But if you have every single asset tracked continuously, and that information is being shared with a third party who can bring you jobs, well, now you've opened yourself up to filling that backhaul, even if it's at a lower rate, but at least you're getting something because someone knows that you're empty and that you're going from here to there, and that's tremendously valuable. And that's where the sort of forward-thinking smaller fleets are actually recognizing that, realizing that, and saying, hey, I need to be on this system not just because it's going to let me continue to operate legally, but it actually will make me more money, that's driving a lot of the early adoption.
So you can hold on, Mike. I got a question now. I want to go back. I actually want to come back in a second to the inefficient marketplace. I think that's a really interesting set of questions and dynamics, particularly in this marketplace. But before that, let's go kind of adjacent and just talk about building great products. You're saying this market's underserved by products. There aren't people building for it. You were at a premier venture capital firm, Vinod, Ben, and the rest of the guys there. You're sort of sitting on top of the world, I'm sure, having had all the great experience you've had at great tech companies and exits and so on. When you sat down and said, okay, we're going after trucking. That's where we're going to go. We're going to keep trucking. What was it that drew you to this market? And then when you sat down and thought about your product strategy, was it, did you do a bunch of design and thinking or did you do sort of the minimum viable product and get out there and just kind of build it and see what worked and didn't work? What was kind of the decision to move to this market, the strategy, and B, what was it and how did you approach actually getting the product into market?
Yeah. So once we recognized, or once I realized, all right, this is the general problem space that I want to go after, and this was just an appreciation. I took a real interest in logistics, both on the consumer side as well as the sort of enterprise or commercial side. And what actually initially attracted me to it was this sort of inefficiency of the freight brokerage process. And my view was, well, instead of going after it directly, I think I want to go after it somewhat indirectly. My view was that the prerequisite to actually building the next generation marketplace was to connect the supply side. And once I sort of uncovered that, how do you do that? Like, what is the actual application? What is the universal utility that will bring these guys online? And that's where logs sort of revealed itself. And at that point, I had sort of seen enough. I'd seen comps like Expensify and Yammer doing the bottoms-up adoption thing, and I recognized, right, I think this can be that opportunity, or at least this is worth taking a shot on. And I'd built a lot of bad products before, and decided, all right, this is the one that I'm gonna go after. So, of course, left my job, decided to go out on my own, and we put together a super simple prototype. It was like a really bad attempt at a paper logbook on your phone, and it's actually a really hard problem. You got offline syncing issues and just generally usability issues, and the product has to be bulletproof. Like the moment you miss an event or ditch a log, like game over, driver's throwing you out. And so, but what we got from that initial prototype was, all right, if we actually did build a quality product here, people would appreciate it. They would like it, and it was incredibly sticky. It's something that you have to use every single day, and I just like that idea of habit formation. And so. We identified the problem and the product, and then when I actually did raise the money and we went after it properly, and I was mentioning this earlier, I think to one of your designers, GV, Google Ventures, gave us. Actually, so before that, we spent a lot of time at truck stops, like actually directly interacting with drivers, carriers over the phone, and brokers over the phone. But we spent a lot of time at truck stops just sharing concepts and getting direct feedback from the end user. And then once we actually did build a product, that prototype, and we were sort of going into production for our proper product, that's when, with the funding from GV and the resources, they provide an incredible UX design research facility. And so we went out to truck stops with a really great researcher who helped us set up really high quality user interviews, and it directly informed the actual product outcome. And as a result, the product is great, and it's getting better continuously. We continuously improve it, and it's very much driven by driver input. So, sorry.
In your case, BCG, you've studied the industry. Your co-founder studied the industry. You guys had a long arc in this business. From everything I can tell, it was a very thoughtful approach. So I'd love to hear about how this got off the ground and what your product strategy was coming out of the gate, and what you the decisions you made that have proved to be important along the way.
So pretty much, so I spent 10, 11 years at BCG, and pretty much the whole time I was working with Lori right here at Daimler. And so that experience was really formative for this. And I think, it was probably 4 or 5 years ago, started talking about what is digital innovation in trucking look like. I mean, we were working on all sorts of things having to do with the truck itself, but the formative thought was there's only so much more innovation that you can have in the metal of the truck. The truck, at this point, they've really dialed in the fuel efficiency from an aerodynamics perspective. The engines are very efficient. Now they have integrated transmissions. That now it's adaptive cruise control, and everything that you're doing with the truck is getting the efficiency up, but at a certain point it's diminishing returns. And the next jump is really outside of the hardware. And it is, so the driver, every year or every couple of years when the truck makers come out with new engines and new technology and so forth, they may get 3%, 5% fuel efficiency improvement. But a good driver to a bad driver can be 20% difference in fuel efficiency. And that's not anything that the hardware has anything to do with. But you can, say, gamify fuel efficient driving and get that driver to drive better. Or if you drive 100 miles empty, well, that's zero fuel efficiency, right? If I'm not carrying any cargo, I just wasted that fuel. So if you can better match supply and demand, then that's actually a huge impact on the efficiency of the fleet. So that was really kind of where the thinking started. And it's similar, but we came in at this saying, how can we apply digital technology to make fleets run better, to make the industry more efficient? And I have to say, really, it was Lori who said, you got to focus on the load. The business of trucking is the load. And so what can we do to think about how we make that load move better? And that was the start of it. The other thing that we focused on very early on was a lot of these companies in our space. So we're creating a marketplace for shippers and carriers. Keychain Logistics started 3-4 years ago. They're now defunct as far as I can tell. There's Cargomatic down in LA. Those guys are not doing so well at this point. And there's, you can name 8, 9, 10 others in this space in various degrees of maturity. One of the things we saw early on was everybody seemed to be focusing on the owner-operator. So, out of the 3.5 million trucks that are on the road, about 350,000 of those are owner-operators. It's sort of a natural place to go because it's when you think Uber for trucks, you're thinking about that driver who owns their own truck and they're sitting in their truck and they're driving and delivering that load and they need the next load. So it's a natural way to sort of extend the Uber phenomenon to trucks. The problem is that those 350,000 owner operators, most of them actually don't make their own decisions. Most of them are leased on. So most of them, they own their own truck, but they sign on to a bigger fleet, and that fleet decides what loads they're going to take. So there are still, I don't know the exact number, maybe 50,000 drivers who truly decide their own loads, but the rest are dispatched by somebody. So that was where we focused was, can we provide better tools for the dispatcher, that person in the office, in that small fleet that has the 5 trucks or the 10 trucks or the 20 trucks that they're dispatching, make their job better, by extension make the driver's job better, because now you're getting the driver. The drivers are only paid when they're actually hauling freight. So the more miles you get the driver, the happier they are. And then in that tool, the tool that helps that dispatcher, helps the drivers move those trucks more efficiently, bring the marketplace there. So then as they're dispatching and scheduling their trucks, we can see when do they have spare capacity, and that's what we're selling. That's what we're going to the shippers. And as you said, instead of the broker sort of randomly searching for somebody, we can say, actually, I know there are 5 trucks in Dallas right now that can take that load. So that was the kind of the genesis of the idea. Now, of course, you guys are a couple years ahead of us in terms of development. So we're still in the making sure we get the product market fit there. I think we've really got now the traction, but of course you have to take a couple of pivots and couple of turns along the way. And that's really what's led us to this heavy haul, is this focus, because
I love the difference. It's like the sort of focus on the load, high level economic theory, and then okay, now how do we navigate versus what's the sheet look like, right? Like what's the thing? What's the piece of paper? And how do we get some Google guys down there to like map out what that better sheet should look like? So it's really interesting. Two pretty different strategies for getting the product into the market.
And highly complementary, which is nice.
Yeah, highly complementary. So two questions. One on the market itself. I want to dovetail to what you were just saying, Matt, and then secondarily, technology innovation opportunities beyond what you're doing in trucking. So there's also some folks who might be interested in the bigger space. And the areas that I found, and I don't go there yet, but drivers, vehicles, sort of containers, highways, were areas that look like were pockets of innovation. I saw one that had a collapsing container, which looked super cool. But
you didn't say anything about autonomous.
yeah, well, drivers or not. So all right. But before we go there, the inefficient, the fragmentation of the market. We talked a little bit about it earlier on the sort of ability for you guys to distribute your products. But what does efficiency mean in this market? To your point, everybody, the untrained person would say, well, Uber for trucks or something, but the reality is it's not like Uber. It's not a local market. It's not someone's, relative driving for Uber because they can take someone so-and-so on Sunday. This is a much more sophisticated logistical problem that an Uber for trucks doesn't really solve. So what does efficiency mean, and where does efficiency get achieved as you roll out? So you can start with your thoughts on what does efficiency mean in this market, and what are the sort of paradigms for thinking about increased efficiency?
So I guess we don't directly try to sell on efficiency gain today, at least not in terms of utilization of the asset. We're doing it, and as I was mentioning, there's sort of some forward-thinking carriers that recognize it, and in fact request that we integrate with their TMS system, or we integrate with these third-party load boards, or the emergent marketplaces, because they want to make sure that their supply is projected. They want to make sure that their available capacity is always communicated, and really that is probably the most fundamental change that's coming in the near term into the industry. And a lot of people sort of get caught up on the autonomous vehicle impact, and my view is it's going to absolutely revolutionize the business, but it's over the next 10 to 20 years. The more immediate change is you're going to go from utilization of 70%, which is just crazy when you think about it, given the environmental impact of underutilized vehicle capacity. But when you now have a world where every single asset, it is possible to know what is the available capacity, where is it now? Does the driver have time available to drive? And that information is being shared. It's not just sort of disappearing into the air. That is incredibly valuable, and I know there's a number of folks that are lining up to take advantage of that information. Y'all included, and our view is we want to facilitate that. We want to get that information out there so that our customers can be more efficient.
So it's not a disruption of the industry like the way that Uber is taking and destroying the taxi, the rental car. It's these same trucks and these same people, but some of them don't know how to use information and some aren't, and that's going to be the delta. So the delta here is the ability to use information.
Without a doubt. I mean, I think what's going to happen is the carriers that recognize that this data is gold, if I share it with the right people, will run more profitable enterprises. They will be able to invest in growth. They will take more market share. And the guys who don't adopt that technology will eventually be moved out. And I think that happens over the next 5 to 10 years before the autonomy wave, in fact, hits. And so while, in 80s deregulation led to like massive fragmentation in the business, I think you're actually going to see aggregation on the back of the difference between a carrier who operates in an efficient manner versus one who does not, one who leverages technology versus one who does not.
So I think there's a really important point in that. Carrier, their business fundamentally is it's buying trucks and loading those trucks and keeping those trucks, loaded as much as they can. I mean that, and we see that in our customers. The ones that are successful are the ones that, they run well and they reinvest and they buy more trucks, and that's what drives their growth. I mean, it's a very simple business in that way, but it's also a pretty tough business. And this industry is filled with shady players and a lot of really bad businesses that do, we experience this because we're in a marketplace and we're matching shippers and carriers, and we've got, we've got the match, and the two guys should be doing business, and one of them just doesn't show up, or their truck breaks down and they show up the next day and they say, well, why, I showed up, why are you complaining? So there are a lot of bad actors as well in the business. And I think what will happen, I think you're exactly right. What will happen is the guys that adopt the technology that makes their businesses run more efficiently will be able to reinvest. They'll buy more trucks. They'll grow. The ones that do not use the technology and that basically can't provide the level of service to the shippers are not going to get the business, and they're not going to be able to grow. And you really will have this separation. It'll be driven a lot by technology. The question is, how does that overcome the forces that have made it such a fragmented industry? Because you look, again, it's a huge number of mom and pop and very small operators, and it's been that way forever. And I would argue the reason for that is because the barriers to entry of having a truck fleet are pretty much zero. Any of us could go out tomorrow, and for $25,000, $30,000, we could buy a crappy used truck and we could start driving. You got to go through a couple week, commercial driver's license training, but they're your truck driver. So it's actually a profession that people can get into very easily. And so you have a lot of those people. And then you also have a lot of, that sort of quality of people that are in it. And I don't think that goes away, but I do think that there will start to be more and more consolidation of the good players, and frankly, platforms like both of ours that expose more of that information, so that make it visible to shippers, the people that are buying these services, who's good and who's bad, and who's quality, who's on time, who actually has trucks available. I can actually see that they have 3 trucks available, so I can actually book one of those trucks, and I know it's going to show up, as opposed to they're going to tell me they have a truck, but they don't really have a truck, and they're going to use their brokerage to go find somebody else who has a truck, and then they're going to show up maybe late. That's going to change the game, and so now you're going to have much higher quality in the industry, and I think those are the ones who are going to survive. But that's going to be driven by technology.
Yeah, I mean, one comment to add to that, I'd say it's kind of crazy when you think about this notion that a business is willing to put its goods that it's either manufactured, imported, purchased, that could be worth millions of dollars, tens of millions of dollars, carried by someone who they literally have no understanding of their operating history, or very little. And in fact, they aren't even directly interacting with them. They're going with a third party, through a third party. It's kind of mind-boggling. And that's where I think there is an opportunity to really differentiate an offering by demonstrating, hey, the quality of our network, the quality of our capacity is fundamentally better, and not even just better, but you can see it. You can know who it is. The operating history is there, and that cannot be underestimated. The carriers that make the most money are the highest quality, and the aggregators who make the most money, or the brokers who make the most money, are the ones and own the greatest market share, and the margin stack are the ones who deliver the highest quality. And so quality is going to be paramount here.
So last question. I think we're going to do one last question. You want to do audience questions? Or okay, we'll do a couple of audience questions, but last question for you two guys. Outside of your companies, outside of each other's company, who is really, or what areas, either areas or specific companies that you like or think are doing interesting things in this space, or what do you see coming in terms of other forms of innovation that are going to be pretty disruptive or enabling?
Yeah. So I'm going to go a little bit contrarian here, perhaps, and just not go to the straight tech plays. But there's a whole industry around lending to trucking companies that is, again, people just don't appreciate it. They don't, we got the Prospers and funding circles that they get all the buzz in town, but there's completely bootstrapped, self-funded, essentially bankers or lenders to the trucking industry. It's called freight factoring. And it's just fascinating, just massive businesses that deliver so much value, actually, and are so fundamental to the actual supply chain. What they're effectively doing is saying, hey, you, the driver, or you, the carrier, whether you're an owner-operator or a carrier, you've delivered a load, you're not going to get paid for 30 days or 45 days. We extend your credit, or we essentially buy your receivable. And we're doing it, at a discount, of course, but it gives you the cash to then continue to operate your business. And they are incredibly important. There's some great players out there that have, again, built their businesses without any outside funding over time by delivering great service to their end customers. And guys like Apex Capital, they just don't get the appreciation that they deserve. Those guys are actually adding a ton of tech to improve the actual transaction experience. But yeah, it's impressive. So yeah.
Sounds important. Yeah.
Totally.
So I got to bring in autonomous. But my view on autonomous is maybe a little bit different than kind of the buzz of, all right, Uber's going to come in and they're going to run all of the trucks without any drivers anymore. There's a company down here in the peninsula called Peloton Technology. I think they're quite interesting. What they're doing is platooning. So it's not fully autonomous. You still have drivers, but you're basically linking up the two trucks, and then the driver in the back is just sort of holding the steering wheel, but the truck is essentially driving itself. That technology goes, the next step, and all the truck makers have their own technology, so they're going to probably end up driving it. But I think what happens is we don't end up in the next 5 or 10 years, I agree, with fully self-driving trucks. Instead, what we end up with is these either initially platoons, so 2-3 trucks. There are drivers in all the trucks, but only the one in the front is on duty. The other guys are sleeping, and then you're rotating. So you get across, basically you can drive the trucks nonstop, but with one driver as opposed to two, which is how you have to do that today. And then that graduates into sort of point-to-point, perhaps driverless, distribution center to distribution center. But we're not going to have trucks driving around downtown Oakland going into the port without a driver in them. It's just not for quite a long time, just because of the complexity and frankly, fear on the part of the public. But I do think that, these trucks are on the road now. I mean, all the truck makers have fully autonomous trucks. They can drive without a driver. These guys are doing these platoons now. They have a number of very big carriers that are running tests with these platooning trucks today. So it's coming, but it's not going to come in the, suddenly there are trucks without drivers in them driving around. It's going to come as more of a driver assist, and it's going to come fast.
Any questions from the audience? A couple questions, and we're going to get back to hanging out and drinking beer. Tammy, hand right up.
I have a couple questions. I'm kind of new to trucking, but one for Matt, and I think that it's good to look at failures and be a student of failures. You talked about a few companies that tried solving what you solved, Cargo's,
Cargomatic.
Cargomatic, or other companies and now they're failing, they're debunked. So what are some of the lessons? Why did they fail? What are some of the lessons that you take from that? And then for Shoaib, a question for you is you mentioned that both your companies are complementary. So how are they complementary? How can you work together? Are you selling to the same customer and together it would be more efficient? Or anyway, so those are the two questions.
Yeah, so we definitely are a student of other failures and look at what other people are doing. So the two that I mentioned were Keychain. So Keychain Logistics was they were a Y Combinator company. They were sort of one of the first into the space. My lesson from them is I think they thought that they could put up a marketplace, sort of the build it and they will come philosophy. They could put a marketplace, people will come and participate, and it really just doesn't work that way. It's not an industry that's looking for how do I get on eBay and start using that for my business. So I think our lesson from that is you really need to have a hook, something something that brings people in the beginning. You guys have this great. I mean, it's the free app that does something that I need. It's fantastic. Our focus is this, the heavy haul space where we're offering something that is unique and people find valuable. So, have some reason to exist. Essentially, was the lesson for me from them. And Cargomatic was a different one, and they're still around, and we'll see. Maybe they're I don't know how they're going to end up doing, but there was a pretty down article on them in the LA Times a few months ago. The lesson for me there is I think, focused on the wrong segment. So, this is such a huge market. Everybody comes in thinking you can't take out the whole thing at once because it's enormous. So you need to find that, local niche, either regional or, a vertical or somewhere where you can actually build some critical mass. And so their focus was local delivery in Los Angeles. And my read is they just had the wrong model of how that business works. I mean, I think they really tried to come in and do Uber. The idea was you'd have these local delivery truck drivers that have an app, and they're sitting in their truck and they're waiting for a load to pop up on their app, and they go and get it. And that's not the way the business works. So I think they learned a little bit too late that their theory of how the business functions wasn't quite right, and weren't able to find the right pivot. So that's, we talk about that a lot. It's, how do we make sure that we're really testing that the model that we think that we know about the industry is correct, and that we're focusing on, driving the business in the way that is scalable.
Sure, how do you guys interoperate?
Yeah, so very specifically, we're actually working on an integration now where Freightstar would have knowledge and access to carriers' hours of service. So how much time does each driver have available to drive, and where is the vehicle? And potentially also, well, actually, it's not as relevant for you guys, but is the vehicle loaded? We can make some inferences that are pretty solid around that. And that information we are going to be passing programmatically to Freightstar. And ultimately, it's the carrier's data, right? And so this comes back to this idea of if they're connected, they can benefit. And so that is the immediate sort of integration and sort of complementary opportunity. But the way we think about it is we bring these guys online, which makes what you guys do much easier.
I said 2 questions, then she asked 2 questions. So one more question, then back, yeah? All right there, you. Yeah.
I was really struck by Nathan's with regulatory issues motivated both of the business models. So I was wondering if you could speak to either the biggest areas of uncertainty moving forward with regulations that are applicable, or what you think like the big risks are in the regulatory environment right now.
Yeah, so I'll take that first. I mean, obviously, our business is highly dependent on this regulatory mandate. And so there was periods of time where, yeah, it kept me up at night, the uncertainty. And it's... Yes. Yeah. So the mandate, the final rule was released December 15th, December 17th, 2016. So 2015. So a year and a half ago, effectively. And that's what sort of put out the two-year window for adoption. And that's coming up, here at the end of this year. And we felt pretty solid about it. We were like, all right, this is done. The FMCSA seems committed to it. And a lot of folks still had their sort of head in the sand, like, oh, this thing is going to go away. And as the sort of clock has ticked down, people are sort of realizing, hey, this is something I actually need to adopt and accept, which has led to just this dramatic acceleration in our business, which is fantastic. But there was this period of time where we were the uncertainty around the presidential election and this idea of we're going to go and take a look at every single piece of regulation that's ever been conceived. And throw it out. what was concerning. But thankfully for us, it's a final rule. It's been out. It was part of this big omnibus bill, which it would be really hard to unwind. It would require another law that would replace it, or repeal, which is very difficult. So we feel pretty good about our position from a regulatory perspective, but the world is full of uncertainty.
We don't have anything nearly so dramatic, but we do have the one thing that we're dealing with is there's a distinction between a carrier and a broker. So if you own trucks, you operate trucks, you're a carrier. If you arrange transportation, you're a broker. That's the definition of a broker, someone who arranges transportation. Well, we arrange transportation through electronic means, but we're not a broker, and that was a very deliberate choice, basically because there is so much distrust in the industry around brokers, and we wanted to clearly differentiate what we're doing from what the brokers are doing. So we're a platform like an eBay in a sense. We're introducing buyers and sellers, but we're not taking a position in the middle. We're just making that connection. But it is, there is some regulatory risk for us here because this is a fine line. We have a very good transportation lawyer, and one of the things he was saying is the law basically is not caught up with what all of you guys are doing. And so, it's not clear. You're not clearly a broker, but you're not clearly not a broker. And so this will play out over the next couple of years as more companies like us come into the market, and we'll have to adapt, and that's fine, and I see that as creating opportunities, but it also creates a little bit of risk.
All right, look, Matt, Freightstar, Shoaib, KeepTruckin, you guys have, when people like you show up in an industry, things start changing. So product developers, people with great backgrounds, people who are going to amass capital. So this is clearly the beginning of sort of a new chapter in this category, and wish you both the best, and let's enjoy the rest of the evening, and thank you guys for participating.
Thank you so much.
Appreciate it.